What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia, ticker symbol NVDA, on a variety of time frames in anticipation of tomorrow's trading day, Wednesday, January 31st. Well, Nvidia here today essentially flat, up about 0.5% or 3 points. Now, fading here in the after hours, obviously we had a lot of tech earnings today, most of which were semi-disappointing, at least as far as the guidance is concerned, which is the primary reason, at least in my opinion, for most of the fading going on after hours. Low volume fading, but fading nonetheless. Nvidia's earnings, of course, aren't until mid to late February. But being that, some of the earnings today were from big blue chip tech companies, Nvidia is going to feel a little bit of that pain here. In the after hours, down just about less than 2%, about 1.85%. Understand, though, this is incredibly low volume movement. So as always, after hours needs to absolutely be with a grain of salt. AMD, their earnings were pretty neutral. The guidance itself for Q1 2024 was a little underwhelming. But, listen, man, if you ask me, low volume is low volume. Okay, so we have to see where the stock sits. It of course could be flat, could be higher, could be quite a bit lower, but we have to see where it sits once we get more volume, a larger sample size, right, into the market. Typically, it's going to be off the open the next day, so I'm curious to see where we end up trading for the majority of tomorrow morning. Let's take a look at the 5-minute chart here. You can see the 630 area that we've had drawn as a technical level for a little while now. That is going to be an area of interest, but we'll get to that in a second. As far as indicators on the 5-minute chart goes, not a lot that I'm paying super close attention to here today. Like, for example, yesterday's trading day, we had more of an interesting setup for potential intraday opportunity off of like that 20 EMA, for example, just psychologically into the close there, really the entirety of the afternoon. Today was relatively sloppy. There's really nothing clean enough here for me to even consider as an intraday setup, but I'm always watching these EMAs intraday to see if there's some kind of psychological movement going on. By the way, if you're intrigued in discussing that, our free market Discord, we just recently started up the free one. The link to that will give you instant free access is in the pinned comment. Let's move on here to the 30-minute time frame and get a little bit more context here as far as technical indicators are concerned. So look here, we have the gray line, that's the 200 period, and the white line is the 50 period here on the 30-minute chart. Again, just one of multiple time frames that we're looking at. We want as many things lining up as possible to strengthen a particular sentiment, right? And that's on as many different time frames as possible. So we can see here, this 50 period has been incredibly relevant the last, really every trading day here on this screen, whether it's as a potential resistance area or support level. That is a relevant moving average here. But we now find ourselves in between the two, forming somewhat of a channel. Understand, though, that the break to the downside of the 50 period, again, it happened after hours during AMD's fade. It's on low volume. So what I'm looking at here is, from a bullish perspective, obviously if we see a hard test of the 200 period during actual trading hours tomorrow, I'd want to see a bounce. If you're a bear, you're looking for a rip down through and a fade down below that level. Now that 50 period here on the 30-minute, if you're a bear also, if we end up seeing an upside test of that, currently sitting right around 625.70, ideally, again, you're looking for a hard rejection and fade, kind of establishing that as at least a short-term potential area of resistance. But if you're bullish here, it's pretty clear. Reclaim that 50 period is priority number one, on at least looking at the 30-minute chart. Okay, let's zoom out here and look at the 4-hour now. This is where things get pretty interesting. We get a really good view here. So this is very clear. Listen, if you're bearish, 600 and the 50 period on the 4-hour are lining up. That's about as clean as you can ask as a potential area of like a safety net of support, right, as a bull. But if you're a bear, priority number one, looking here at the 4-hour chart in particular, break downside off 600 through the 50 period moving average, ideally back tested to the upside and fade. If you're a bull and we see a downside test, it's pretty obvious, right? We want to see a hold, even if it bounces 4 or 5 times. I don't care. Just hold that level. Now, the upside of this channel here, 630 is a pretty clear area. 630 to 635, yeah, I'm looking at it as a range. If you're a bull here looking at this, the upper end of this channel, again, it's pretty clear. Break upside, back test. If we bounce, fine. Rip our way out, ideally up through 635. If you're bearish and we come in for a test of 630, you're going to have a lot of bears psychologically looking at that area, hoping for a fade. Okay, and if we end up getting a test and fade off 630, it's going to be encouraging to a lot of bears and slightly discouraging to quite a few bulls. Again, at least in the very, very short term. Okay, now let's zoom out and look here at the daily chart. Zoom in a little bit more for better context here. And you can see here on NVIDIA, this starts to show even better. That 600 to 630, 635 channel becomes very, very obvious looking at this on a variety of time frames, doesn't it? This 50-day moving average is still down just over $500 a share, currently sitting about 513. Yeah, not incredibly relevant as of right now because we've seen this aggressive pull away. These two are lagging behind. But the ideal scenarios for both bulls and bears here on the daily chart, you know, they of course stay the same because that channel is incredibly obvious. Looking at implied volatility, you can see here it's creeping up in the short term, like compared to the last 6 weeks or so, 6-7 weeks, it is higher. So just understand if you bought options or are looking to purchase options, it is a little bit higher. So if you purchase them anywhere from, you know, looking maybe like 2 to 6 weeks ago, you have benefited from some IV pump. And if you're looking to purchase them, just understand that you run the risk of slightly elevated potential, right, for some IV crush if we end up seeing a return down toward equilibrium, down toward that 40% range from about 45%. That, of course, can work against you if you are purchasing options. Let's finish up here. Let's look at the options chain and get an idea of what the options traders are thinking as we head into tomorrow. So, almost 1 million total contracts traded, 945,000. That's a good sample size. Plenty of data here. 580,000 of those are calls. 364,000 of those are puts. Overall call put ratio here is leaning to the bullish side, but if we look at the short-term speculators, the 0 to 20 delta, right? That singles out the short-term speculators by looking only at the out-of-the-money, typically cheapy, gambly style, normally shorter dated, much shorter dated contracts here. That gives us an idea of the variation between short-term speculators. What are they thinking here? 144,000 calls in that range, 186,000 approximately puts in that range. So overall call put ratio is leaning to the bullish side, but the short-term speculators are leaning slightly bearish. Just understand though that all this data was collected before the close, right? When options were still available to trade. So we have to understand that there is new information now that we got tech earnings, AMD earnings in particular, and the stock has faded a bit. Hey, listen, if these videos help you out in any way, please subscribe to the channel, and I'll see you in the next one.